And I just stood there and I was like, nope, not falling for it. And you know what happened? Netflix fell a lot right after they announced earnings. So there's a couple tips for you there. Hi, hello, good morning, good afternoon, good evening, wherever you are. Today, we are going to talk about 5 different stock market red flags. And so 2 of them are actually going to be about the market in general, and then 3 of them are going to be about individual stocks and the red flags to look for in terms of when the market is going to turn and things are going to go down. My name's Jody Jacobs. I am the founder and CEO of Market Start. I am here to help you recover your stock market losses, and I'm also here for beginners who want to get started in the stock market. I also own a multi-7-figure business that is an annual multi-7-figure business in Santa Monica, California, and my passions in life are stock market investing and running a business. So, all right, let's jump in. Okay, so when it comes to the overall stock market, there are 2 really big red flags that you want to look for in terms of when the market is going to go down. One of them is when the market is at an all-time high. Now, I'm not saying that the market is always definitely going to go down when the market is at an all-time high, but I will tell you that after investing in the stock market for over 2 decades, the one pattern that I have consistently seen is that the market tends to start trending down after we peak or after we reach a new top. And the reason for that is because a lot of times with the market on a whole and also individual stocks, there are support levels and resistance levels. And basically a support level of a stock or a major index is when a stock just keeps coming down and hitting that point, or the market, or one of the major indexes like the S&P, the NASDAQ, or the Dow will come down and hit that level or price point multiple times, but it doesn't usually go below that. When the market hits a new high, it tends to become a new point of resistance. So generally, the market will do what's called a pullback when it hits resistance or a new point or a new high, and it will come back. And that's because there's such thing as price consolidation, volume, and the market is just kind of evening out. And then it also just pulls back so more investors can come in, and then more volume is needed, and there's a whole lot behind it. But overall, that is one of the things that you want to be looking for before the market turns down. This is not always on point. It's not always exact, but it is something to always watch for. Okay, another red flag that you want to look for when the stock market is about to turn. And actually, this also has to do with individual stocks as well. So I guess all of these are really about individual stocks and the overall general market. But a telltale sign of when the market is going to shift is when buying is exhausted, which means that the market will close lower than where it opened. So let's say the Dow opened up 100 points higher than where it closed yesterday. But 4 o'clock Eastern Standard Time rolls around, and now the market is down 500 points. If you see that consistently, especially for 3 days in a row, something that drastic, that usually means we're shifting down. So Now you'll see some days after that where it's going to pop and people start to get optimistic again, but chances are we're heading down for a longer period of time. Hopefully not into a bear market, but you never know. So when you see the majority of the stocks that you're holding making these patterns, when you see the major indexes, again, being the Dow, the S&P, and the NASDAQ, doing this, where, again, it's closing lower than where it was when it opened, that is a huge red flag that the market is probably turning and to protect your investments. Okay, now the next three are going to be mainly about individual stocks and some red flags to look for. The first one is when you see a stock make a big drop. Now, this might be very obvious to a lot of you, but I'm gonna actually tell you why this is important to know and the real reason behind when we see these major drops, because not everybody knows this. But one of the main reasons why we see big drops, like for example, Tesla the other day dropped 30 points or $30 because they announced bad earnings and they announced bad projection for the next quarter, which is a completely different video for a different time. But anyway, Tesla dropped 30 points the other day because of bad earnings. When you see a stock drop a very big amount, that usually means that an institution or a large bank is selling off that stock. Institutions and large banks, call it what it is, but they're obviously insider trading. They're talking to each other. They're figuring things out. They know stuff on the back end. They know stuff behind the companies. They're putting stuff on the news that is completely in their favor. So that's another reason why you don't want to listen to Bloomberg and CNBC all the time. Anyway, I'm getting off topic. So when you see a stock, especially one as big as Tesla, that is selling off in huge amounts, it usually means that an institution is selling it off. And institutions, big banks, they are the major volume holders for each stock because they have that money to invest in a stock. So they're moving the stocks, they're moving the indexes all day, every day. And that is why you see those big drops. And also on the flip side, why you see those big run-ups. So when you see big moves like that, stocks moving 30, 40, 50, sometimes 100 points, those are big banks and institutions. And generally you want to follow what they're doing because they know what they're doing. The second red flag that I'm going to talk about when it comes to individual stocks when you're investing in the stock market, the second red flag that you want to look out for before it makes a downturn is when there's low volume. So a lot of times, sometimes you'll see a stock run up or it'll go up 5, 10, 15 points one day, but there's not a lot of volume. So if you're paying attention to charts, you want to look at the volume across the bottom of the screen, or you want to set up your chart so it shows the volume on the screen. Now, each stock is going to be different. There are different price points, obviously, for each stock, and different volume means different things depending on the stock and how long it has been public for and how many shares there are on the market. And there's a lot of components to it, but over time you do kind of develop an understanding of what's good volume for one stock versus not. But basically it's just a comparison of the volume bars of all the other days. So if you see the stock making big moves, but there's not really a lot of volume on the bottom, that's a red flag, because that can sometimes mean, well, that can mean a few things. That can mean, which actually goes into my next point, which is a pump and dump scheme, as they call them. But basically, you could see that a bank or an institution is trying to make that stock, or they're trying to pump up that stock. They're The volume isn't there because there's not a lot of investors investing in the stock. It's one major investor and they're just pumping up the stock just in case they know that bad earnings are around the corner, but they're making it look very attractive so that a lot of investors will get into the stock so they can rip the rug out from under them. So be careful of those. You always want to make sure there's a good amount of volume on the stock chart of a stock before getting in, because if you see that volume is very low and the stock is going high, that means that stock is probably going to crash and burn. So be very careful. Very important, look at the volume on the chart. So going back to what I was saying before, a huge major red flag that you really want to pay attention to when it comes to stock market investing is something called a pump and dump scheme. Basically, this usually happens around a stock's earning announcement, which is why you should always write down your stocks and when they announce their earnings. It sounds so simple, but you would be surprised. Most people do not do this. So always mark down when your stocks are about to announce earnings, and never buy anything unless you know for sure how Wall Street is going to react to an earnings announcement. Never buy a stock around earnings season. And a lot of the times, especially stocks that are higher priced, you might notice that, for example, this was probably, this had to have been over 15 years ago, maybe longer, actually. Maybe I've been investing a lot longer. But Netflix was about to announce earnings. And I don't remember if it's because I was following the seasonality of the stock or I just knew the pattern of the stock, but I knew that their earnings were not going to be favorable. I'm sure it was something on the fundamental end as well. But I saw that stock price was getting inflated. It was getting inflated over 2 or 3 days before they were about to announce earnings. And I just stood there and I was like, nope, not falling for it. And you know what happened? Netflix fell a lot right after they announced earnings. So there's a couple tips for you there. If you see a stock getting overly inflated just before they're about to announce earnings, especially if it's a hot stock that they're talking about on CNBC and Bloomberg and in the Wall Street Journal a lot, be careful. Sometimes, yes, they will announce good earnings, but sometimes it's a pump and dump scheme, meaning a bank or institution is pumping up that stock. They're overly inflating that stock to make it look attractive to investors. So individual investors jump in and get the rug pulled out from under them. And then that bank takes all that money away from you. So be careful. Pump and dump scheme. Not fun times. I've been there too many times. All right, guys, I hope this was super helpful for you. If you have any questions, please post them below. And if you haven't subscribed to my YouTube channel yet, go ahead and click that subscribe button, and I'll see you on the next one.